Hello, hello. Ginny Bolling here with Pivot to Prosperity, the podcast brought to you by Pivotal Real Estate Investments, where we help our investors build wealth and income through commercial real estate that also improves communities. And today we have Melvin Landry with us. And thank you for coming today. I appreciate that, Melvin.
Thanks for the opportunity. I appreciate it. Yeah.
Yes, yes.
Yeah.
Well, so why don't you go ahead and introduce yourself?
Sure, sure. So I'm Melvin Landry. I reside in Pittsburgh, Pennsylvania. I'm a native of South Louisiana, so I grew up in between Baton Rouge and New Orleans. And been living in Pittsburgh since 2021. Been investing here since 2005. So the journey has been a fun one, and it kind of comes full circle because it brought me back to Pittsburgh, Pennsylvania. So, when I invested in my first property, it was a small duplex that's about 18 minutes away from the house. And I was doing it while I was living in Omaha. So, yeah. So, yeah, they say life comes back full circle. It really does.
That's great. That's great.
Yeah.
Well, now when we were talking before recording, you didn't mention Omaha, so you've been a lot of places. Tell a little bit more about your journey, would you?
Sure. So, journey, let's see, man. Journey started undergrad in Louisiana. And then I went to the University of Arkansas. And then I pivoted back home area, University of New Orleans. Got my MBA, so I got 3 degrees by the time I was 22. And then I jumped out into the workforce. Moved to Greeley, Colorado, hour north of Denver, working for one of the largest beef packers in the country, which is now JBS Swift. So think about Swift Premium. I was working for them. So I was there single, bought a new car, and got on the road and left. Went to the mighty West. So did that and lived in Colorado 4 years. Then it took me over to Omaha, where I lived in Omaha, Nebraska, in the middle of a heartland for 6 years. In between that time frame there, I kind of got exposure and was looking around the real estate. So I went to a seminar and I got the opportunity and I purchased the REO in the Swissvale municipality, 18 minutes from the house.
REO,
And
real estate owned, a foreclosure. Uh-huh.
yeah, bought a foreclosure and got it renovated. So I bought it 32,000 and I put like 10 into it. And I got it dealing with programs. I like affordable housing programs. This one did Section 8. I was getting 850 for the top and 650 for the bottom, and I was cash flowing $900 a month on my very first property. And
Nice.
could imagine, look, it was going well. I knew the tenants. I was getting to Pittsburgh about once a quarter. And, while I was coming to Pittsburgh, I was visiting my buddies, my fraternity brothers who I still keep in touch with to this day. And I started buying more. I just started buying more real estate indirectly. My foot was kind of off the gas. So I wasn't, I had built a power team. I had contractors who I had gotten built a rapport with. I had a realtor I was going to, had a title company, had an appraiser, had a structural engineer. So I built the power team and they knew I was out of town. So built trusted relationships. And look, it started going well. I just started buying more REOs. That was kind of like my focus. So in between that time frame, I got a mentor.
What years
Uh,
was that?
and we're talking 2006, 2007, 2000. Between that time and, I was
When
in
prices
Omaha.
were going up.
Yeah, yeah, going up, but I was still getting primary REOs.
Yep.
So bottom of the barrel prices, distress. I was buying them. I was buying. That was my buy box. My buy box was distress, 35K and under. Scoop them up cash, quick close, lined up, work for my contractors. I know they were working remote. I was remote, and I'd go check on them, drop in periodically, randomly. So they didn't know when I was in town. And that the spot check, sometimes you got to do that even in today's world when you have large apartments, right? And look, it started going well. So, when I first started, I bought in 3 states. Pennsylvania was kind of like my gold mine. I bought in Arizona and I bought in Indiana too. And The next two didn't bode well for me. So I ended up short selling my property in Arizona. Huge loss. Yeah, and I short sold on the property in Indiana. Even though it cash flowed, I still short sold it. So the focus ended up turning to Pennsylvania. So stuck to it,
So,
kept growing, kept growing, kept growing, kept buying, and got it to the point where it's 60 plus properties and I'm cash flowing 37,000 net. You think about, what I was doing. And look, my foot was off the gas. I wasn't concerned. Look, my mindset was different. My mindset was on my 9 to 5. And I was teaching classes. I just started getting into, and I've been teaching March and make 20 years. I've been teaching online, different schools, different capacity. 40 different schools around the country. So, my mindset was a little different back then. So you think 20 years ago, right? Just
yeah,
was a little
yeah.
different. So
So you were teaching, but on your rentals, you were making 37,000 per month, right?
30 net cash flow,
Net.
primarily affordable housing,
Want to make sure the audience
folks
heard
with
that.
vouchers. Yeah, folks with vouchers. And look, here's how I spearheaded, right? So I'd rent to one lady, ironically, one lady's sister, her aunt, her cousin, everyone had vouchers. And they saw how we approach renovations. We took care of tenants. I had a system in place, right? Real estate is all about a system. That's how you drive success. And I mean, the whole family was renting from me. This got to be a family affair. So I would come to the city. The family knew I was there. Hey, Mr. Landry's in town. Pop in, make sure everything's good. Checking things. If there are issues, we get it addressed. And I mean, the demand for housing for my folks, because I mean, look, I was remote, right? I was kind of managing, being a project manager from Omaha. And look, I mean, I don't want tenants complaining, right? I was asset management, right? Kind of doing it, managing it on my own, right? Requests were funneling to me, and I would dispatch people. And look, you keep tenants happy when you get stuff done. They pay on time. And look, there's always about 7 to 10% of folks who just won't do right. I had to evict. Again, and we talked before the show, right? The Pennsylvania state is 41 days to get someone in and out. And that's if you're kind of going formally without waiving posting notices on the door. So I had been through the motion that I know to the day how many days I can get someone in and out of an apartment, so or a unit. So yeah, yeah, that
Yeah, it's
ended up
tough when
motivating.
you're remote too, because you have to have people you can trust to go do things.
That's half the battle.
Back
I
then, you
was,
probably couldn't file stuff electronically either, right?
yeah,
Or could you?
nah, no, 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 no. I mean,
Yeah.
I had an
Okay.
issue.
COVID helped that.
Yeah, for sure. I mean, but for the most part, I mean, for the 7 to 10% of folks who I did had to end up getting rid of, I mean, it just became just like blatantly, you know what I mean? And look, I didn't think I wouldn't hesitate to hop on a plane, go to court, get you out of there. You're talking
Yeah.
10% of the time, so not much, but I'll do it.
Yeah.
I,
Well, when you have a net income of 37,000 a month too, it's not a big deal to jump on a plane and go over, really.
not a big deal. And I guess at the time is about kind of proving a point, right? But
Yeah.
the
And you get
value
to
on the
see the
time.
college buddies too.
Yeah, 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 and hang with my buddies too. So there's a little
Another
different
good
nowadays.
lesson. Buy
Yeah,
where
in
you
terms of
like
your
to
time.
go.
Yeah,
Buy where
yeah,
you like to go.
yeah. Yeah, and now it's a little different, but
Yeah.
yeah, I mean, but
Yeah.
I had a system in place, I had a mentor, and I was on a
Great.
roll. I was
So I
pretty
want to fast
consistent.
forward you a little so we leave enough time out, but I do want
Yeah,
you to touch on your franchise experience briefly, but then
sure.
let's get to where you are today with your awesome portfolio,
Yeah,
diversified and so we have to leave time for that.
sure. Yeah, so fast forward, 2011 August, I meet my wife, get engaged. 12 months later, get married in 2013. Have a son in 2014, and voila, 2015, we get into a business venture. We get into a business venture that takes me fast forward, right? You think Omaha, I'm living in Vegas when I got married. I was working for the casinos and
And how
living a
many
life.
houses did you have then?
62, give or
Okay.
take. And
So you were a teacher and work in the casinos.
working in procurement for
Yep.
yep, in Vegas,
Oh,
corporate
procurement then. Okay.
procurement,
For
yeah. And
GE.
I'm sorry.
Never mind. Go ahead.
Oh no, yeah, I was working in procurement, loving life. I love living in Vegas. Eventually, hopefully, it takes me back there at some point. But yeah, look, yeah, life was good. I had kind of slowed up on purchasing properties. So you think, girlfriend, fiance, wife,
You
son,
were busy.
yeah, busy. Yeah, yeah, we're busy. So life, hey, life catches up to you. So actually, it came kind of to a standstill. I mean, I was raking in the cash flow for my rental system was in place. And I was just kind of in maintain mode. So we decided to open up a business venture. We moved to Texas, and we opened up a new shiny business venture that engaged in being a franchise, and progressed in. You fast forward 2015 to 2019, right? We ended up closing. So not quite being the beautiful, great opportunity we thought it was. So with that came, reduction in my overall portfolio. So I sold nearly 85% of my portfolio, right? When you're dealing with exiting the business, legal issues, and things of that nature. So
Legal issues and paying off an SBA loan, right?
SBA loans and,
Yep. They don't just forgive those, do they?
they don't. They don't. Even with COVID and things of that nature. So yeah, ended up seeing my portfolio dwindle. So had to sell cash flow and rentals. And was I overly concerned? It hurt, right? I mean, I lost a lot of cash flow, as I told you, but I trusted the fact that I had the education for a system, right? And I felt pretty strong that I can do it all over again. But I was like it was a rough patch. 19, 20, 21 was rough. So we ended up moving out of Texas, decided to move to PA. What the intent was, hey, we can, I can ramp this thing up again and can kind of come out the gates running pretty fast. And got exposure to multifamily. Went to a seminar, got exposure to multifamily. Saw how folks were building $1 million portfolios quickly. How folks were getting the tax benefits, and that just kind of kept me inquisitive to expand my knowledge, continually get educated, build on the knowledge that I had, and just look. I mean, fast forward to today, right? Life comes back full circle. I mentioned, look, I'm back in Pittsburgh. It's kind of here's kind of where real estate started for me, and I'm an active and a passive investor. And the foot is on the gas. The mindset is different, right? So,
I need you to speak up because I want to be sure people can hear you talking like this because this
yeah,
is the mental
yeah,
part of it that
yeah.
is
Look. I mean, my
you can
foot.
overcome a lot.
You can. Look. I lost $1 million in a venture that. I mean, yeah, it hurts. But when you got the mindset of having unwavering support, you come back stronger, and that's kind of how I look at it. Have no regrets. You fall back down, you get back up, right? And I'm in athletics. I was a college athlete. I ran track in college. I ran cross country, right? Sometimes it's not about how you start, it's how you finish. So look, I'm excited. I'm blessed. Came out of it stronger. I'm involved in real estate. I understand the tax law now. I understand how one should not pay taxes legally. And at the end of the day, it's about cash flow. Cash flow matters, right? You hear folks screaming, you hear the noise in the media, interest rates, interest rates. If you can make a lot of money in a bad economy, you got it made. Okay. So, those economic principles come back full circle. It could be doom and gloom outside. That's okay. That's okay. I'm still excited. I'm still fired up. Still buying real estate. I'm still passionate about affordable housing. Still growing the portfolio. The passive investor notch, right, is something new that's kind of faceted. Man, whew, whew. Benefits of passive investment. Oh my goodness.
Oh yeah, you don't have to spend any time once you make that decision.
You get
Yeah.
the reports. You're in lockstep with the team. You ask the questions. You get the K1 with the passive losses. Oh man, it's like a kid in a candy store. Like, let me get some more of that, right? So they got educated, right? It's just like, look, we do 4 to 6 passive investments a year, and we're investing in different things. So I've co-sponsored self-storage. I've gotten in passively on a triple net. That's bringing good cash flow. Leveraging
Explain
my
what the triple
IRA.
net is. Explain what you
Triple,
did on triple net
yeah, yeah.
and what
Triple
it is.
net is, when a group of individuals buy a retail building. This is an educational facility in Salt Lake, Texas, and you buy cash, and we're reaping. I get a monthly. I call it a monthly stipend, and it goes back into my IRA. So, I've worked a lot of jobs in my career, and I had all these IRAs sitting here collecting dust doing nothing. Put them to work once I realized that I could. And 18 months, I'm in like 14 deals.
Yeah, you have quite a portfolio. And so when you say you put your IRAs to work, go ahead and expound on that a bit.
Yep. So I had old 401ks. I worked a lot of jobs. I moved around a little bit, right? Out of each one of those employers, I had a 401k just sitting there collecting dust, doing nothing. So, I was involved in stocks and bonds, right? And some do well, most don't. Some are just kind of status quo. So I liquidated those. And the power of real estate kind of helps bring a lot more advantages that stocks and bonds just don't. And you know what? Investing with your self-directed IRA gives you control. I want the control to do what I want to do with my money. So if I win, I grow with appreciation, which is in many cases happens in real estate. That's a win. If it doesn't, that's okay too. What goes up must come down, and vice versa in any market. Economics 101. So I'm very passionate about kind of putting my money in behind real estate. Now I've gotten educated in on the tax benefits associated to it, and I'm trying to share the knowledge and share the word. But Jenny, I'll say this: there are many folks out there who are still not listening.
I know.
So
I know. Yeah.
very unfortunate. And I kind of want to speak to it. It's very unfortunate that folks are not listening. Folks are not taking heed to leveraging and making choices on their own. And at the end of the day, I mean, hey, look, hey, it's lonely at the top. I'll just say that. I'll keep preaching.
Yeah.
I'm a testament, right? I
You
mean,
are. Yeah. Yeah.
I
So,
mean,
and
yeah,
let me even grab a line that you said there. What goes up must come down. There's one thing that I think that especially you as a professor of economics, you're going to take the lead here from me. What I'm going to say is that real estate, the dirt, the ground we all stand on, is the most known for building wealth than anything. And since the beginning of man, people have fought over land. That's what brought about kings and queens and land holdings and all the rest of it. So it does come
absolutely.
down, but relative speaking,
Relative.
right? So it's all the while the cost of real estate, even though it fluctuates some, it's still, you go ahead. It's,
Yeah, yeah. I mean, it still maintains and holds its weight, right? At the end of the day.
yeah,
And
it
look, I
doesn't
mean, the
disappear.
population, right? Population is not going down. I mean, people need housing. Folks need places to stay. That's never going to be null and void. So, look, passionate about the outcome of being able to provide. I mentioned earlier to you before the show about affordable housing. Providing that opportunity for individuals. And look, it brings a newfound appreciation that you can provide. So, look, we love dealing with programs in our own local market and continuing to strive to put those affordable housing opportunities there for individuals.
So for your area where you do so much of the Section 8, do you find it difficult to deal with the government on any of that?
Mm, Jen, I've been dealing with it so long, so I would say no. I mean, look, I got my first Section 8 tenant, what, 2005, 2006, so I
Yeah,
understand the
it has been a while.
parameters. Yeah, so I know what needs to be submitted. I know what they're looking for. Get a packet in. Someone gives me a voucher. I get it completed. Look, they need taxes. They need verification. They do background check what they've done because I've been in the system for so long. So I can get things turned relatively quickly. If someone needs a rush, if there's an emergency situation for maybe a young lady or a guy and their family and their kids, I know, right? I've been doing this a while. So it just comes second nature in terms of here's what we need to do, etc. One of the things I do now versus what I didn't do before, I run background check on all tenants. Didn't do that before. As I got educated now, I run background on all. So, I mean, in hindsight, I can pick and choose, right? There's, certain type of tenant that I'm looking for that I want, in my units. But I mean, they need to pass a background check at the very least.
So, well, we won't get into the nuances of all that. So, your apartments now, are you usually a limited partner in those, or are you a general partner on some of those, or how are you doing
Both,
that?
both. So, general partner on about 265 units and limited on 2,700 and growing. General partner on self-storage opportunity in South Carolina with a fantastic team, 517 units also as well. So,
That's
uh,
terrific. And
yeah,
that's
yeah.
all since when? What year did you start?
Late 2021 is when I really got ramped up and going. So, we just, I mean, a good going on 20 months now
2,700 units plus 500 plus in storage. That's huge.
and looking to grow substantially in 2024.
And how many houses do you own? Are they
Right.
counted in that 2,700?
No, it is not. No, I've kind of restarted in my backyard. So we're back at 11
Uh-huh.
and another seven on the contract. I'm trying to buy one multifamily a month in my own backyard if I can do it. Trying to buy one a month, whether it's a 4 unit, a 6 unit, 10 unit. My goal is to buy one a month.
Are you
And that
using your money or other people's? Are you syndicating? What are you doing with those?
other people money, private money, other people's money, private lending. So the goal is leverage, get it quick, renovate it quick. I have some more crews now that I'm local, and turn around and kind of refinance the debt into portfolio loans. Right? You hear folks screaming about interest rates are high. I mean, look, I'm getting none of these loans quickly, but they come at a price, right? Nothing comes quick, low, and easy. The rates are relatively high. So,
Yeah.
but the outlook is look, everyone is hedging their bets on the, rates being cut in 2024. It's going to come at some point, but labor is still strong. So, I think the back half of the year we'll see that quite relief that many folks have been looking for. It's going to come at a perfect time because I have units ready to kind of put into a portfolio. And for me, it's about, the whole time on these local rentals are going to be kind of infinite. I want to be able to pass it on to my little guy and he can have cash flow when my days are done. So it's about legacy wealth building now. I have one son, he's 9. He understands mom and dad's, we're investors. He understands cash flow. We go through flashcards. So there's an enhancement education that I'm trying to get him grounded with because his passion is aviation. He wants to be a commercial pilot. We'll help him get there, but he can invest too. So yeah,
He
yeah.
sees that money coming in probably.
I know he does.
Yeah,
He
getting your
don't get it
pilot's
right.
license. Pilot's
Yeah,
licenses aren't cheap, right?
I'm prepping for that now. Yeah, so for the hours. Yep, that's
That's
correct.
great.
Yeah,
Well, listen, I don't want to go too long here. I would
yeah,
like to ask you my big question, and that's
sure.
is there a pivotal person or event that's made a big difference in where you are today?
I will say the event with closing the business was a pivotal moment, at least for myself, my family, my marriage, etc. One could have really been an ostrich and just stuck their head in the sand and not come up. So I was one to kind of take the high road, like, look, we'll come out this stronger. And I've always had kind of an easy going, even keel mindset. It's just we will come out here stronger. I've built a real estate legacy portfolio, with my feet off the gas and gotten to 60 units. I know we can do it if we really put our foot on the gas, kind of put our heads together.
Yeah.
So got alignment with my spouse coming out of the business ordeal. We came out stronger. I mean, look, and it's an unwavering mindset it's ferocious. You got to be ferociously obsessed with wanting to be successful. And my wife tells me that all the time, and that's okay. I mean, cherish. The mindset is so different now versus when it was when I bought my first property.
Yeah.
It's just like, you know, we got to stick to it, right? So it was a monumental shift, and I'm glad that happened because I came out stronger. My mindset's a lot different, and I'm so focused. I mean, we're reaping the benefits now. So, and we're growing, and we're making an impact, and we're setting ourselves up for, an early retirement. So, you hear folks an adage kind of stuck with me in terms of, man, they teach you to go to school, right? You go to school, get a job, you work 30, 40 years, then you're 60, 62, 65, and then you got 11 years left for retirement. So, I think about that, right? And for my family in particular, so the average age of my father's siblings was 57. Average age, six kids. I lost my father in 2022. The average age of all combined, and there's one alive left out of the six, was 57 years old. So you
His
put that into
average age of
perspective.
life or to retire?
Average age of life.
Oh,
Average age of life was 57. And everyone passed by a heart attack. My
uh,
father included. My dad, I lost my dad at 70 in 2022. So look, it puts things into perspective now in terms of health, wealth, mindset, doing the right things, and longevity of life. So yeah, the mindset is just totally, totally different. So I am really laser focused on trying to keep my health. I'm a runner. I'm still active. It's in my, setting goals. Do a few half marathons this year, and health brings wealth and longevity at the end of the day. So that's what it's all about.
yep. And that's pretty much the moral of this interview is that you can fall down and get back up, but it's
Yes,
about mindset.
half the battle. Yeah.
Yes. Yeah, that's terrific. Okay. Well, tell people how they can reach you.
Sure, sure. You can find me Facebook, Instagram, LinkedIn, Melvin Landry. You can follow us, join our investor club on our website, morelandequity.com. And additionally, if you go to YouTube, you search Get Diversified podcast, you can find me there. I'm not that hard to miss. So I have a diversified family, wife's Italian and Polish, and our podcast Get Diversified. So we practice what we preach indeed. So yeah, that's how you can find me. Yeah.
Great, great. Okay. Well, thank you again. And we're going to talk after I stop recording here. So just a
Okay.
moment. Thank you.
Thank you. Thanks for the opportunity.